Daycare, diapers, college funds, and writing a will. These things are scary as a new parent. Hey, I'm Jackie. I'm here to help you navigate the rocky waters of financial parenthood with 8 tips I wish I knew when I was a new parent. When I was expecting my first child, life was chaotic. I had to buy a new home for a growing family. I actually ended up moving 3 times while my wife was pregnant. There were so many things going on, the last thing I had on my mind was how much I was spending. Needless to say, I spent way too much, paid too much unnecessary taxes, and really had no clue where all my money went. As I grew in my business, I learned these 8 powerful lessons, and when my second child came around, I was much more prepared. So here are the 8 things I wish I knew as a new parent. Number 1, update your cash flow plan. Adjust your cash flow plan to include new spendable, such as diapers and formulas, new clothes, kids' activities, or just overall more cost for food. Adjusting the spendable means you're increasing your weekly limit. I do not need you to consider or count every single dollar that you're spending in every one of these categories. Instead, stick to a new weekly spendable budget and ensure that you're not overspending by following just that one simple number. Don't forget to add new committed expenses as well. Committed expenses are generally non-emotional, fixed, or predictable costs for your everyday needs. For a child, this is like your daycare cost or RESP savings should be added in your committed expenses line items. Lastly, I tend to add one-time expense for newborns with the cost of new furniture or buying car seats or strollers. This is a good idea to budget just an overall number so that you can spend on new baby gadgets that you'll need around the house. Number 2, write or update your will. If you have no will, make sure you're writing a will. The will is not just there to take care of your finances or your assets. In fact, the will has a very important feature called the legal guardianship. The legal guardianship allows you to designate who's going to be taking care of your children when you aren't there. It allows your child to go to your loved ones instead of the child services with the government. If you do have a will, make sure you're reviewing it and updating it to include your children. There are ways you can draft your will to include any future children as well if you plan to have more than one. Number 3, update your dependents on your health and dental plan. Make sure your child is covered by adding them as a dependent in any of your benefits plan that you're eligible for. This can include your company's and your spouse's benefit plans so that they have access to things like healthcare and dental services that you would have otherwise paid for out of your pocket if you did not. So many people miss adding this back into their plan, and it causes some issues with them adding it back in later. This is called late enrollment. So make sure when your child is born, you are contacting your HR department to update your benefit plan to include your children right away. Number 4, update your beneficiaries. This seems like an obvious one, but a lot of new parents do tend to miss this one because they forget to add them in the right areas. Things like your RSP should never include your children unless it is a contingent beneficiary. The reason for this is because spouses gets to take your RSP tax-free as a tax-free rollover. Whereas if you left it behind for children, it will be taxed in their hands. So I recommend not changing your RSP beneficiary to your children. Instead, add them as contingent beneficiary. Because this way, if you did forget to change your beneficiary when your spouse passed away, it will still go to your children instead of the government's. But things like your tax-free saving account or work benefits or other insurance policy can include your children. This depends on what your wishes are for your legacy and your estate. So make sure you're having this conversation with your spouse before changing those things. Number 5, create an education savings plan, RESP. Only about half of Canadians are getting the CESG or the RESP grant, which means the other half of Canadians are not utilizing this and not getting the free money that they deserve for their children. The RESP grant is a 20% top-up to your deposit for the education savings plan. This means if you put in $2,500 a year, you will be eligible for a $500 top-up for your children's education savings. If you have forgotten to do this in the first year and you needed to catch back up on some missed contribution, you're allowed to do so for up to 2 years consecutively. Meaning, instead of putting $2,500 a year, you can put up to $5,000 a year and still receive the full grant top-up from the government. One of the biggest benefits of having this RESP savings account for their children is that the income that we receive from this account is taxed at the hands of the children when they go to university, instead of you. Chances are you have a higher tax bracket than your child. Contributions, though, are not tax deductible. So this is not like the RRSP that you would have. The growth, though, is tax-free until they withdraw the money to go to school. But if your child doesn't go to school, you'll be able to get back your deposit and the gains. However, the gains will be taxed to you unless you have the ability to transfer it into your RSP if there's room. But all the grants and the gains from the grants go back to the government. Number 6, review and update your insurance plans. This is another area where I tend to see new parents forget to do some work. They forget that they have purchased some insurance way back when they first got married or first got their home, and now that the life has changed, they forget to increase the insurance needs as there is now new dependency. Chances are your income is now more dependent on your overall family needs, and you need it to support the ever-growing lifestyle that you and your family want. So make sure you're reviewing all aspects of your life insurance, critical illness, and disability insurance to match up your financial needs. Number 7, give your accountant a heads up and keep receipts. There are different government grants and credits that are available for just having children here in Canada. Make sure you're having this discussion with your accountant to know what is eligible for you to be claimed. This will overall help lower your income taxes and put more money back in your pockets so that you and your family can enjoy it. It is your responsibility to make sure that you file these or else you lose them. These are not things you can get back if you forget to do them this year. Remember, it's your responsibility to make sure you're filing for the credits that you qualify for. Another one that gets missed a lot are the receipts for daycare and other learning facilities. They can help lower your overall personal income taxes and put more money back in your pockets. Make sure you're speaking with your accountants to see which one you're applicable for. Number 8, revisit your lifetime financial goals. Have you ever asked yourself, once you have your child, what other aspirations do you have for your children? Such as, do you want them to go to private school? Is there additional savings like a down payment that you want to help with in the future? There's so many things you can change about your finances and add value for your children. But it all depends on what your overall lifetime goal is. There's a rule that I have in my family. I gotta make sure that we take care of ourselves before we can help our children. It's a lot like that safety demonstration on an aircraft. You gotta put on your oxygen mask first before you can help your children. So are you overall helping yourself and achieving your financial goals, or are you giving it away too much for your children? Make sure you are sitting down and revisiting your overall lifetime goals to make sure everything is in line with what you're trying to achieve. Children are expensive to raise, but I see time and time again that families who plan ahead are best equipped to deal with the unknown future. It is a good idea to always plan for the worst and execute on the best. Your time is only becoming more valuable with a new addition to the family. Leave the heavy lifting to the professional so you can free up your time for the things you love and create precious memories with your family. Having a financial planner on your team will allow you to map out the upcoming changes that is keeping you up at night and avoid the common mistakes that will keep you from achieving your goals. Thank you for watching. If you're feeling stuck and want unbiased financial advice explained in ways you can easily understand, book a call with the link in the description down below.